There is a building in Washington, D.C. that defies the official narrative of American history. The old Post Office Pavilion, completed in 1899. Granite columns, a 315-foot clock tower, vaulted ceilings with hand-carved stone to detail. It cost $3.2 million. The federal government built it, and they did it without collecting a single dollar of income tax from American citizens. In fact, the federal government achieved architectural and military dominance across 45 states before 1913. They built the entire transcontinental railroad system. They funded the Spanish-American War. They constructed the Library of Congress and maintained a standing military. All of it financed before the 16th Amendment was ratified, giving Congress the power to levy taxes directly on your labor. The official story you are taught is simple, neat, and highly sanitized. Before 1913, tariffs, excise taxes on alcohol and tobacco, and the sale of public lands covered everything. It is a comforting narrative of a small, frugal government living within its means. But when you look at the ledgers and measure them against the marble, the math shatters. Let me show you what the textbooks hide. In 1890, total federal revenue was officially reported at approximately $403 million. The majority came from customs duties at the ports, roughly 57%. Internal taxes on whiskey and tobacco brought in another 30%, a modest income for a rapidly industrializing nation. But during that exact same decade, the federal government funded the completion of multiple transcontinental rail lines. They laid the groundwork for the Panama Canal infrastructure. They built 27 massive new federal courthouses, and they expanded the United States Navy from 42 ships to 95, transforming it into a global armada. The expenditure is staggering. The USS Indiana, launched in 1893, cost over $3 million. The Pension Building in Washington, finished in 1887, required massive federal appropriations. The Montana State Capitol, completed in 1902. The 1893 World's Columbian Exposition in Chicago, an entire temporary city of neoclassical palaces. Added up across one decade, and the numbers stop cooperating with the official revenue. Consider the physical scope. Between 1865 and 1913, the federal government constructed infrastructure that rivaled the ancient empires of Europe. State capitals with domes larger than the U.S. Capitol itself. Courthouses built with marble imported from Italy. Post offices in remote towns of 3,000 people featuring granite facades and solid bronze fixtures. This wasn't frugality. This was hidden abundance. And the people who kept the books remembered. There was an entire generation of Americans who worked inside the Treasury and Customs offices before 1913. Clerks, accountants, and mid-level bureaucrats who saw exactly how the money moved. Many lived long enough to be interviewed in the 1930s and 1940s by researchers capturing oral histories. Their testimonies were filed away. Most were never widely published. Eleanor Vance was born in 1868 in Boston. She worked as a clerk in the U.S. Customs House from 1889 to 1922. In a 1938 interview preserved at the Massachusetts Historical Society, she described the ledger system used to track tariff revenue. When asked if tariffs alone could have funded federal operations, she paused, then said, "There were other columns. We called them special appropriations." The interviewer asked what that meant. She said the records were kept separately and she wasn't permitted to discuss them. "We called them special appropriations," she said. The records were kept separately, and she was explicitly instructed never to discuss them. John Hastings, a Treasury Department accountant from 1895 to 1931, gave a nearly identical account in a 1941 oral history. He reviewed federal expenditure reports and noticed massive surpluses that did not correspond to any known tariff collections. When Hastings asked his supervisor about the millions of unaccounted dollars, he was told those funds came from asset management and were strictly excluded from public appropriations reports. He never saw a full accounting. These witnesses were not conspiracy theorists. They were clerks. They filed receipts, tracked expenditures, and balanced the ledgers. And what they described destroys the textbook narrative. The official story says tariffs covered everything. In 1880, tariff revenue was $186 million. In 1910, it was $333 million. Modest, predictable growth. But during that exact same period, federal expenditures ballooned from $268 million to almost $700 million. The gap widened every single year. So, where did the money come from? The textbooks lie. The buildings do not. They say there was wealth flowing into federal coffers from sources that were either not publicly reported or reported under categories designed to obscure their true origin. Wealth substantial enough to fund construction that still stands today, over a century later, as some of the most durable infrastructure in America. Then came 1913. The year everything changed, the 16th Amendment passed, and the federal income tax became the permanent law of the land. Within a single generation, the people who actually remembered how the old system functioned were gone. The institutional memory was quietly buried, but the receipts are not gone. The appropriations records, the customs ledgers, and the Treasury reports from 1870 to 1912 are sitting in the National Archives right now. The testimonies from elderly clerks and accountants are preserved in university basements. The buildings themselves are still standing. They are physical proof that something funded them. Let me show you a specific, undeniable case that makes the funding question impossible to ignore. The 1893 World's Columbian Exposition in Chicago. 27 million visitors across 6 months. Over 200 buildings spread across 630 acres. They called it the White City. Official records show the federal government appropriated $2.5 million for the exposition. The total cost of construction, however, was documented at approximately $28 million. Private investors in Chicago supposedly covered most of that. But here's where the numbers fracture and the official story breaks apart. The main government building alone, a neoclassical behemoth covering 420,000 square feet, was funded entirely by federal appropriations. According to the official exposition directory published in 1893, construction cost $400,000. It featured a central dome 120 feet in diameter and interior halls finished with marble and gold leaf. For context, the Washington Monument, a comparatively simple stone obelisk, took 36 years to complete and cost $1.2 million. The government building at the White City was exponentially more complex, built in half the time, for a third of the cost, and then it was demolished 6 months later. The construction contracts are still in the archives. I found them while tracing appropriations records for the Bureau of Public Buildings. The primary contractor was the George Fuller Company of Chicago. The contract, dated March 1891, specifies materials, labor schedules, and payment terms in perfect legal detail. What it does not specify is the funding source. Treasury records from 1891 show total customs revenue for that year at $219 million. Total federal expenditures were $365 million. This means the government was already running a massive structural deficit of $146 million. Yet somehow, an additional $400,000 was magically allocated for a temporary exhibition building with absolutely no permanent federal purpose. And this was not an isolated anomaly. Across the exact same decade, identical phantom appropriations appear for mega projects in multiple cities. The 1901 Pan American Exposition in Buffalo received $500,000 in federal funding. The 1904 Louisiana Purchase Exposition in St. Louis received $5 million. Each time, massive neoclassical structures were built at lightning speed, displayed briefly, and then demolished completely, erased from the landscape. Each time, The funding appears in federal ledgers without clear sourcing. But here is the detail that establishment researchers have deliberately ignored since 1910. In that year, a congressional investigation led by Senator Nelson Aldrich quietly examined federal expenditures spanning from 1890 to 1909. According to the final report published in 1911, the committee identified approximately $340 million in expenditures categorized as internal improvements and special appropriations. These funds lacked any detailed sourcing, customs records, or excise tax receipts. The money simply manifested on the books. The report noted these funds vaguely appeared to come from asset management, but provided zero itemized accounting. The Aldrich Commission formally recommended a deeper investigation. Do you know what happened next? Nothing. No further investigation occurred. The 16th Amendment was ratified exactly 2 years later. There were people who noticed. Albert Gallatin, a high-level Treasury official from 1897 to 1920, gave testimony to the Aldrich Commission in 1910. His testimony describes a secondary ledger system used by the Treasury Department to track what he called non-tariff revenue. He was pulling back the curtain on a shadow economy. When asked to specify the sources, Gallatin stated they included mineral rights on federal land, harbor fees, and lease payments from railroad companies. He calculated these sources generated approximately $20 million annually, substantial but nowhere near the $340 million gap the commission had already identified. When pressed, Gallatin testified that certain revenue streams were classified under administrative discretion and were never included in public reports. The commission demanded documentation. He stated, "The records were maintained separately by the Office of the Secretary of the Interior. They were off the Treasury's main books." The commission requested those records. According to the hearing transcripts, the request was referred to the Interior Department. No records were ever produced. The trail went cold in the very heart of the government. Then there's the matter of the gold reserves, a mathematical impossibility that defies every textbook explanation. In 1890, the U.S. Treasury held approximately $190 million in gold reserves. By 1910, despite funding massive wars and infrastructure, those reserves had grown to $1.5 billion. The official explanation is international trade, but tariff revenue only grew by $100 million. The gold had to come from somewhere else. There were elderly miners and land office clerks who remembered how it really worked. Samuel Birch, a Colorado land office administrator, was interviewed in 1942. He described a system where mining companies paid royalties directly to the federal government in gold for extraction on public lands. Birch estimated the payments totaled millions annually, but said the accounting was handled through different channels, not the regular books. He said the reports were sent to Washington quarterly. I have looked for those reports in the National Archives. They are not there. They have been excised from history. Which brings us to the question nobody asked loudly enough in 1913. If the system was working, if these hidden streams and tariffs were covering everything, why did the government suddenly need to tax your individual income? The official justification was progressive reform, a mask for a total structural takeover. President Taft signed the income tax into law, and by October, the Revenue Act of 1913 established a 1% tax. The rhetoric was about fairness, but the timing suggests a replacement. Something else happened in 1913. The Federal Reserve Act was signed into law, creating a central banking system. Two massive financial restructurings in a single year. One gave the government power to tax you directly. The other gave a private consortium of banks control over the money supply. Together, they replaced a system that had built America with something entirely new and far more controllable. Opposition was silenced. Senator William Borah warned that income tax would shift power from the people to a permanent federal apparatus. He warned it would require perpetual expansion. He was right. And within a decade of his warning, the old system's paper trail began to conveniently disappear. In 1921, a fire in the Treasury Department annex destroyed records related to internal revenue from 1890 to 1910. In 1933, the Treasury consolidated its ledger systems and reclassified pre-1913 revenue. The detailed sourcing was lost forever. The witnesses died, the textbooks were rewritten, but the buildings from before 1913 are still standing. The granite courthouses, the marble post offices, the state capitals with bronze doors. They are physical proof that the government wasn't small and wasn't frugal. They had the money, they just didn't want you to know how they got it. History repeats. Not because it has to, but because people forget. If you don't want to forget, subscribe. And in the comments, tell me which part of this hidden math unsettled you most.